You know, this video is really important because for governments and central bankers to create the level of debt that they have to in a debt-based currency, what they have to do at the same time, or what they are doing at the same time, is reducing your purchasing power through inflation. But what happens when you get to zero in terms of purchasing power? Then they have to take your principal too. So you've got to understand what's really happening so you can see the signs and make educated choices that put your best interest first. What a concept. While they want you to think, meaning the central banks, while central banks keep talking about tightening policy, in reality, when you're looking at this, what do you see? What this is telling you is that financial conditions have remained very, very loose. Now, we've talked about this before, but what that really means and what's happening with now the trend of global central bankers to start to drop those interest rates, and everybody, Wall Street and everybody's saying we want that to happen, right? But that is about generating inflation to pay this unpayable debt, not really to inflate away the value of the currency to pay the unpayable debt, but it really is to facilitate the further buildup of vulnerabilities. That's what the ability, more credit, more debt really does. It facilitates the further buildup of vulnerability. Asset valuations appear lofty. Debt has climbed globally, and the use of leverage, which is debt upon debt upon debt, that's what leverage is, among non-bank financial intermediaries has increased. This is from the 2024 IMF survey on what's happening in the finance around the world. It's easy to raise money and create these bubbles and create this illusion of wealth when in reality what they're doing is destroying your wealth by taking all of the purchasing power out of the currencies. That's what's really, truly happening. But, you know, the policy has been around for such a long time. I mean, this was a piece that was created by Currier and Ives back in 1875. And see if this doesn't seem to ring true today as well. Because what we have is inflation, along with policy adjustments that create even more inflation. And then the credit available to the broader public, because every Ponzi scheme requires new money to come in. And what you have then is a risk on gambling, a risk on trade, which, I mean, come on, are we in risk on now? And bogus schemes. Now, these schemes, let's see, what's FDIC? What did they, meaning the central banks and the government, call the FDIC? A scheme, a deposit insurance scheme. Those are their words, not mine. But they are bogus because we know in the U.S., the FDIC has a teeny-weeny bit more than 1 penny for every insured dollar, let alone none for the uninsured depositors, which they're about to find out, I'm sure. And also, what do? They create gold derivatives. A derivative is something that's derived from something. So a gold derivative is actually derived from real gold. But you cannot convert it back into that gold. It is just a piece of paper. And central banks and governments do not want you to hold gold because then you hold the power in your hands. And they would rather that you hold it in all different ways than physically outside of the system, because inflating fiat money products creates the illusion of opportunity and growth, but not the reality of it at the end of the day. But the higher things go, the more people start to pay attention and think, oh, look at this, is really, really easy to make all of this money. How nice. Well, it's been my personal experience that hard work is really how you build a solid foundation. So our governments and central bankers at the end of their bubble regime, and what happens if indeed they are, those bubbles pop. So whoever holds their wealth in them, that wealth evaporates, boom, overnight. And that's where we are right now. Do you think that this time is different? Because quite honestly, I don't. I've studied this and how currencies, how governments and central banks make that transition from one currency to another and get everybody to cooperate. Well, I'm saying don't cooperate. Let's create a quiet revolution. If you don't have a foundation of sound money in your personal strategy, give us a call, click the link, scan that QR code, get it in place while you still have the opportunity to do so. So this is also from the October 2024 IMF Global Financial Stability Report. And what do they say? That there is a disconnect between high geopolitical risk and low financial market volatility. So what the green line is financial volatility minus economic uncertainty. And what the red line is financial volatility minus geopolitical risk. And I hope that you can see from this graph that according to the IMF, they are all below zero. There is a tremendous amount of complacency in these markets, thinking everything is priced to perfection and perfection can last forever. That's hopium. That is not reality. So even if you're going to go along with the hopium trade, be properly diversified. You know, I always like to ask myself, what if I'm right and what if I'm wrong? And when I can do something that doesn't matter whether I'm right or wrong, rock and roll hoochie coo. That's what I will choose every single time. But keep this in mind because this is critical when you're looking at that complacency and you look in the mirror, you want to ask yourself, you know, do I really think that geopolitical and financial market risk is gone? Do I have to hedge my bet? Yes, you do. Because uncertainty is elevated and vulnerabilities are mounting, but yet there is complacency in the market as if this time is different, when frankly, it is never, ever different. These bubbles hide the real risk that you are facing. Open your eyes and make sure that you have a properly diversified portfolio. Personally, I'm not really all that diversified. But then again, I've lived my life inside of these markets. I've been a banker, a stockbroker. I've studied currency lifecycles since 1987. I always want the lion's share of my wealth in an undervalued asset that is in a long-term positive trend, and the least amount of my wealth in a long-term negative trend, which really the real trend is in the purchasing power. We've talked about this many times. And I have to bring up to you, too, the sovereign debt in default by debtor from 1975 when this game first started, or this current iteration of a pure debt-based system first started, and through 2023. And what do we really see here? That the trend is up. And it spiked back here in 2012. And then it dropped back a little bit, but you can see that these highs are higher than the previous highs. This trend will continue. The blue here are advanced economies. You're going to see that that's happening there again too. Happened quite a bit, just not in 2023. Can you see this trend? You didn't see any of the advanced economies in that category before the sovereign debt crisis in Europe. Keep that in mind. So where do you want to be positioned? Because desperate governments do desperate things. And inflation is used to repay that debt with currencies that have less and less and less value until they ultimately go to zero. I am a trillionaire in Zimbabwe, and yet I can do nothing with that $10 trillion note, right? So you have to really understand that the government can pay off their debts with this. And actually, if you hold your purchasing power, guess what? Part of the strategy is you paying off your debts with worthless currency. That's all part of the layered strategy depending upon your debt. And I'll tell you something else. I had a lot of people say, well, does the strategy work where I am? And it really was kind of a puzzle, because here in the U.S., we have an advantage in that we can have 15 to 30-year mortgages, fixed rate debt. Most of the other parts of the world, it's 2 years, 5 years, 10 years maybe. If anybody knows of anything longer, that's fine. But then what happens is that debt resets, and if interest rates are higher, right, it's about protecting the bank. It's about making sure that here in the U.S. and actually globally too, because banks buy the government debt and then hold it. So when those interest rates were raised, all of the banks, including the central banks, they are underwater in their investments, because when interest rates go up, the market value of that debt goes down. So that's all the mortgages, all the car loans, everything. Okay, so be very clear on that, because desperate governments do desperate things. This is why personally I only hold collectible gold, because governments are getting very desperate, and I don't care which one you look at. It's true. In this report from the Bank of Canada and the Bank of England, they have identified 42 sovereigns that defaulted on local currency debt between 1960 and 2023. 42 sovereigns. And they take different forms. Perhaps most striking is the number of cases involving the exchange of old currency for new currency on confiscatory terms. They can say it in all different ways, but inflation is a form of confiscation. Taxation is a form of confiscation. And actually, outright confiscation is a form. And royalties are so many different names for it, but here they're actually admitting it. And these are two central banks. Okie dokie. Creditors incur losses. Well, who are the creditors? Well, I am, because this is actually a debt instrument. And guess what? Okay. These are current US dollars. And what do they say on the top? Federal Reserve note. Well, a note is a debt instrument. So the creditors are whoever is holding dollars or assets that can only be converted into dollars. That's who the creditors are. Make no mistake. It doesn't matter what your perception is. That is indeed the reality. And so how do they do that? They set short time frames to exchange old banknotes for new ones. They place limits on amounts that can be exchanged. They require that notes above such limits be deposited into blocked account. They bar foreign holders of old currency from participation in such exchanges. So I know a lot of people have thought that the Iraqi dinar was going to regain its value. That never happens. Could this time be different? Well, I suppose. I mean, that's all way beyond my pay grade. But is it likely to happen? Oh, no, 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 no. You can, however, always convert sound money, physical gold and silver, into any currency wherever you are in the world. It's key to know that, because physical gold and silver are universal sound money above all governments, above all central bankers, regardless of the form. There's all different ways that you can accumulate. And people will ask me all the time, and I'll do some more work on that. But this just came out, and I think this is huge, and I may dig into this a lot more. Africans demand a bigger share of their natural resources wealth. So again, there are so many different ways that wealth can be confiscated from its citizens. And who's it really, the Africans, or is it really the government and the central bank? It's not just military juntas resorting to resource nationalism, which is a form of confiscation. Democracies like Botswana, Senegal, and Zambia are demanding better deals too. These are the governments. These are not the populations. So what they're doing is they're forcing miners to sell to the government in terms of local currency a portion of whatever gold they mine. Okay, and that is a currency that, as we've seen, can easily default and is definitely could be hyperinflating at the moment, but is certainly inflating because that's how these currencies were created. And at the same time, what you have is the highest monthly net buying for all of 2024 in terms of central banks buying gold. Isn't that interesting? They don't want you to buy it because they know that if you don't hold it, you don't own it. So they don't want you to be able to protect your purchasing power and your wealth, but they're going to do it. I suggest that you do what the smartest guys in the room are doing for themselves. Who knows more about the destruction that they're reaching and that they're going for in terms of this stuff than central bankers, right? This just goes through the Q3 of 2024. It's the most current data on it through October. Don't you think that's interesting? That it is the highest monthly net buying for 2024. The purple is the selling, okay, gross sales, and this is gross purchases. Central banks increase the physical gold buying at the same time that they know that there's no purchasing power left. This is a Ponzi scheme. Ponzi schemes require new money. They need your participation, and they have a scheme to do it. And it's critical. You can see, we've recently just did a video last week on real examples of why owning gold and silver is crucial. You can follow that link, and I suggest that you do, because this is how it happens every single time. And this is a current example of it. So if you want to show your support, please give us a like. Do it on the way in. Leave us a comment. Let's have this conversation. Share, share, share with your friends and family, and make sure that you subscribe. I know without any doubt in my mind that together, we can really make a positive difference in this world. Join the Sound Money movement. Just convert some of that fiat into sound money. You'll be properly diversified. And I can't give you a whole lot of guarantees, but I'm certainly prepared to give you this guarantee. There will come a point where you will be very, very grateful that you did it. And don't forget, we need more than just sound money. We need food, water, energy, security, barterability, wealth preservation, community, and shelter to maintain a reasonable standard of living. And together we can make those things happen on a local and a global basis. So until next we meet, please be safe out there. Bye-bye.